another big one today, Apple. Apple edging a little bit higher in today's trade. You see the stock price since its recent high still off by 16%. There are investor concerns over iPhone sales. It was a big reason, one of the big reasons that the market started to sell off yesterday, and it really accelerated, and the bottom almost fell out there at the end. We were down 600 points, but Apple kind of started us to the downside. Keith Fitz-Gerald joins us now with more on Apple. So it's at the moment 16% off the highs, and are people looking at this, Keith, and saying, all right, now's the time to think about buying Apple again, or what?
I think that's a good logical conclusion. You know, the company hasn't been about the iPhone for a long time. It's been about the non-intrinsic stuff, the subscriptions, the Apple Pay, the music. You know, those are the things that are going to drive revenues. You're talking about an installed base of 1.3 billion devices, give or take a few hundred million.
That is a transition, though. I know you say it hasn't been about the iPhone for a long time, but, you know, regular people still associate Apple with iPhones and iPhone sales, and I think there is still some sort of an open question about whether Apple under Tim Cook is able to successfully, in this economy, everything that's going on, make that transition that you talk about. You think they are?
Well, you know, I've worried about that for a long time because they used to, under Steve Jobs' watch, ooze innovation. Now they ooze MBAs. So you got to imagine this is a logical assumption on Tim Cook's part. I think he knows what he's doing. It took me a long time to sort of figure that out. But now that he is moving ahead, I'm very comfortable with it. I do think Apple's got a little bit lower to go, probably into the 175 range, maybe even a little bit better. But then you're going to see a lot of buying because people are going to recognize that the withdrawal from the iPhone-centric model that has built it is going to take them into the future.
The other thing I wonder if they'll recognize is that there's and maybe we should have never talked about all of these companies together to begin with, but we were just talking about Amazon with Edward Lawrence, and if you throw in the other so-called FANG names, the acronym there with Facebook and Amazon and Apple, Netflix, and Google, which is now under its parent company Alphabet, is there a separation now in how investors, or maybe there has been for some time, view those companies? Because it seems to me, especially now in this environment, they're so different, all the challenges that they face, and they maybe shouldn't be grouped together as much.
You know, I think that's a very astute point, and it's one I agree with. I think you do have to separate Facebook and Apple, and then you've got to deal with the rest of them on an individualized basis. To me, the strongest players are going to be Amazon and Alphabet.
Okay, why?
Well, Amazon is certainly, for all the reasons you just pointed out, it's a behemoth. It's Amazon versus everybody else, and it's not just about retail, it's big data. So this is another area where investors have had to shift their attention. Alphabet is the same kind of thing. We're talking about multiple streams of business, not one of which is accurately valued by the market right now. So if you're a long-term investor, I think the withdrawal we've had because of October volatility is a great opportunity for the right perspective.
But you see challenges for the others, for Netflix and for Facebook, even for Apple, because that was the question yesterday when the market sold off so much, is we see tech down, and now today they're bouncing back a bit as if we're in a transition to a new phase of kind of leadership in the market, and if so, where are we transitioning to?
I think the psychology right now is key. You know, this is not about the fundamentals. This is not about any of the double-digit growth we're seeing in those names. This is all about people trying to get ahead of a perceived global trade war against tax reform, against Democrats going after the president. So they're really trying to make a second-guessing decision, which never works out well. If you focus on Facebook, Zuckerberg has got tremendous legal challenges. If you look at Apple, you've got to have this transition psychologically in the investor base. Then it will be back. Facebook, I'm not so certain about.
Yeah, Facebook's it's a whole different set of issues, I guess, for Facebook. Keith, before we let you go, because we're going to talk about it in a minute in some more detail, trade, right? We were having this conversation at the top of the hour that it seems, if you read into Larry Kudlow's comments, that the White House now has trade on the agenda at the G20. They're going to talk about it. I know they have a meeting today as well internally, but they're going to talk about it. Is that a good sign? Do you expect the president to cut some sort of a deal now with China rather than keep a hardline, kind of Peter Navarro-esque stance?
You know, that's something I've thought a lot about. I spent a lot of time on the ground in China over the years, and if there's one thing that's important to the Chinese, it's not losing face. Yep. I think there will be logic that comes to the front of this. I think they are maintaining a very hard line, and rightfully so, behind the scenes. But if they come to an agreement, it's going to be in a way that China doesn't lose face, so it can sell it to its own people.
Yep, and we need to sell it here as well. I think that's the other side of it, or the president will if he does decide to cut a deal. Good to see you, Keith. Always is. Thanks for coming on. Keith Fitz-Gerald.